We will now discuss the format of balance sheet. Today you will read the bare text of Schedule 3 Division 2, which is printed at the end of the chapter. Okay, and we have made a summary of that. All important points we will discuss today. So balance sheet, name of the company you will write, balance sheet as at you will write, and rupees in. According to question you can write in thousand, lakhs, million, crore, whatever they will write in the question you will do it. And this will be the format. This remark column I have added for explanation part. Remark is not a part of the format. Okay. So you have note number, end of current year, end of previous year. This balance sheet starts from asset side. This balance sheet starts from asset side. You will say, no sir, equity and liabilities, oh those days are over. Now you have become a big man. So one, non-current asset, only two parts are there on the asset side, non-current asset, current asset. About what is current and non-current asset we will discuss in Ind AS 1. Is it right? But basic information you already have. Detailed discussion in Ind AS 1 as to what is current and what is non-current asset. So here we will disclose items, property, plant and equipment. Which items will come here? Example, factory, building, plant and machinery, furniture, office equipment, and one more item, bearer plants. The meaning of bearer plant will be discussed in Ind AS 41 and also Ind AS 16. Example of a bearer plant is a mango tree, that is those plant which bear fruits and vegetables. They themselves are not sold, but the produce is sold, like mango tree, and they have a long life. So therefore even the bearer plants are treated like PP. They are also depreciated, revalued and like that. Then next item is capital work in progress, which means those PPE item which are not yet ready for use. They are under construction, like building under construction, plant and machinery under construction. One more line item which was probably you have not studied in intermediate was investment property. There is a standard on that. Can you give me the number? Yes, number Ind AS 40. Investment property means investment in land and building for earning rent or capital appreciation, not for use in the business. Don't write, it will come in Ind AS 40. Main objective is to earn rent, capital appreciation, like investment in land, investment in real estate. Then next item you will disclose is separately goodwill. Then you have to disclose other intangible assets. Which standard deals with intangible asset? Any idea? Ind AS 38. And what are the examples of intangible asset? Brands, software, patents, trademark, website, copyright, license, mining rights, designs. These are intangible asset. Similarly, you have intangible asset under development. It takes long period of time for an intangible to be ready. For example, software. It may take 3 years, 5 years. Finally, a software will be launched. So that is intangible. You have to disclose it separately because funds are blocked. Sometimes funds are blocked for a very long period of time. So it is better to inform your investor users that so much money has already been invested in this intangible which is under development. and there are some disclosure requirement which I will tell you after some time. So examples are software under development, website under development, COVID medicine under development. One more new item for you is biological asset. Ind AS 41. Ind AS 41. Not applicable to many companies in India, but yes, for a few companies it is still applicable, like companies having tea plants, coffee plants, livestock will come here, plants other than bearer plants, because bearer plants will come as a separate item under PPE. Then after that we will disclose financial assets. There are three standards dealing with financial asset: Ind AS 32, 109, 107. Now, how do you differentiate financial assets from other asset? In financial asset, there is a contractual right to receive cash or other financial asset from other party. But I am not going into detailed discussion of this. We will discuss in Ind AS 32, 107, 109, contractual right to receive cash. Then investment. Under financial asset, we will show investment. Investment in FVT OCI instrument separately disclosed. Investment in FVT PL. Investment at amortized cost. These are the three categories of financial asset as per Ind AS. FVT PL, FVT OCI and amortized cost. Similarly, if you have investment in subsidiary, associate, joint venture, it will be disclosed separately. Investment or then trade receivable. Oh, some student will wonder why trade receivable has come in non-current asset. Suppose your debtor will pay after 3 years. So don't you think it will come as non-current asset? You may have a agreement with the debtor that you can pay after 3 years. So debtors will come here, less allowance for bad debt. Any allowance for bad debt or what we call now impairment loss will be deducted. Then loans and advances, example loans given to staff, loan given to others, and other financial assets. Under other financial asset we have bank FD, but it should have a maturity of more than 1 year. What if it is a maturity of less than 12 months? Current. Deferred tax asset always non-current. Deferred tax asset always non-current. And then finally, one last heading is other non-current asset. What will not fit specifically into the above heads, you will put it under other non-current asset. Example, gold, silver, capital advance, that is building advance. Building advance is not a financial asset because here there is a contractual right to receive asset, not cash. So it is not a financial asset. What about gold and silver? Interestingly, there are no specific standard on gold and silver. Then the second part of the asset side is current asset. Under current asset, you will start with inventory. Different types of inventory you will present separately, like raw material, WIP, finished goods, stock in trade, and then you will write financial asset. Under that you will write trade receivable if it is short term. Cash and cash equivalent, under that we will write cash in hand, cash at bank, bank FD whose maturity is 3 months. Bank FD whose maturity is 3 months from the date of acquisition will come under cash equivalent. Other items will come as other bank balance. For example, bank FD whose maturity is more than 3 months up to 12 months. Then earmarked deposit. Earmarked deposit means those amounts which are for specific purpose. Like for example, when the company declares dividend, they transfer the amount to a special account from which dividend will be paid. Or margin money. That means sometime in order to get some contract or some job, you have to deposit some money with the bank, margin money. Loans and advances also will come here if it is short term. Example, loan to staff, loans to other, and then other financial asset. Under other financial asset, we will show accrued interest, interest receivable, dividend receivable, etc. And then next item is current tax asset. Current tax asset means TDS. Somebody has deducted TDS, so we are going to adjust it against tax liability. We pay advance tax, any income tax refund receivable, and if you have a MAT credit. Have you heard MAT credit? Minimum alternate tax. In some year we pay tax as per MAT. That is when the tax liability as per book profit is more than tax liability as per normal provision of Income Tax Act. That is called tax paid as per MAT. So the excess amount paid as per MAT can be adjusted against future tax liability. So it is your asset. So it will be presented as a separate item in current tax asset. It is not shown as a financial asset because it is not contractual. It is statutory item, not a contractual item. You get this right because of law, not because of contract. And then in the last item you will put other current asset like advances paid to supplier, prepaid expense, then GST input credit will come under other current asset. So that was my asset side. Now we'll come to equity and liability side. Under equity and liability side, you will start with equity. Under that, first we'll write share capital. The detailed discussion we have already had, and we have to make a separate disclosure of all the paid up capital, authorized capital, etc. in SOCI. Change in share capital in SOCI. For other equity also we'll prepare one SOCI. Then if you are preparing CFS, consolidated financial statement, then non-controlling interest, which you know as minority interest, will also come under this heading, equity, because they are also equity shareholder of subsidiary company. Is it right? So we'll prepare one note on in SOCI. Then we will show non-current liabilities. Liability side has three items: equity, non-current liability, current liability. And non-current liability, first item financial liability. Under that, borrowing, example term loan. Then amount which is payable within 12 months will be shown as current liability. Suppose you have to pay loan in 5 installment. One installment is payable next year. So this one installment amount will go to current liability, and remaining 4 will come in non-current liability. Then trade payable. Now you have to divide the trade payable into two categories. Payable to MSME, micro, small, medium enterprise. Many companies don't pay as MSME, their money is getting blocked. So they have a liquidity problem. The big companies are enjoying, small companies are suffering. So they have asked that you must disclose separately on the face of the balance sheet. And there are some more disclosures here. We'll come to that. And trade payable others. And now they have to give aging also. Do you know aging? Up to 6 months, 6 months to 12 months, 12 months to 1 year, 1 to 2 years. So that as a user I will know that the company is delaying in making payment to the creditor. Delaying payment to creditor will affect the reputation of the company. Then next item is other financial liability. Long-term liabilities, that is contractual obligation to pay. Financial liability means contractual obligation to pay cash. Deferred tax liability as per Ind AS 12. However, if you are getting both DTA and DTL, as per Ind AS 12 it can be set off subject to certain condition. One condition is that DTA and DTL must arise under same tax law. DTA and DTL must arise under same tax law. Then in the balance sheet I will show net figure. If liability is more than asset, net DTL. If asset is more than liability, net DTA. Then we'll come to next item, long-term provision. Under long-term provision, example could be retirement benefit liability, like provision for gratuity or provision for warranty. Then we have other non-current liability. So here we will write down those long-term liabilities which are not contractual. If it is contractual liability to pay cash, it will come under financial liabilities. And after that, the third item is current liabilities. In current liabilities, we have a financial liability. You will find same presentation for current liability. We have borrowing. It will have short-term borrowing, bank overdraft. Then trade payable will also come under financial liability, because there is a contractual obligation to pay cash. Divide into two categories, payable to MSME and other payable. Then after that we have other financial liabilities. Example, accrued interest, unclaimed dividend, bills payable, commercial paper. Commercial papers are short-term borrowing. Then after that we have current tax liability, where we will show tax payable to the government, actual tax payable to the government calculated as per tax law. And then all short-term provisions will come here, including provision for losses. And then other current liabilities which are contractual but not payable in cash. Is it right? Like for example, advance taken for supply of goods. So my contractual obligation is to deliver goods or service. So it will come under other current liability. So this is about balance sheet item. To make your task easier, I have written some notes also. While solving the question, we will take care of these notes. If the amount is due within 12 months from the end of the reporting date, like in case of loan, in case of lease liability, then what we will do, that portion of the liability which is payable within 12 months, we are going to put it under the head other financial liability under current liability. Why? Because current ratio will get affected. Current ratio tells you current asset divided by current liabilities. The persons who are interested in knowing the liquidity of the company will check the current ratio, and this liability will come within 12 months. So therefore, if you are interested in knowing the liquidity position, you need to know which liability will fall due within 12 months, and hence now whenever you have a liability whose some portion is payable within 12 months, that also you show it in the current liability. Very important ratio. Liquidity is very important factor. Otherwise, what will happen? What happened to Go First Air? Liquidity problem. What happened to Jet Airways? Liquidity problem. What is happening to SpiceJet? Liquidity problem. Okay. So if the investor knows well in advance this company is likely to have a liquidity problem, you will stay away from that company. MSME means micro, small and medium enterprises. Government is trying to protect them by making companies show the amount due to MSME separately on the balance sheet. So if the amount is due, overdue, it will bring disrepute to the company. Goodwill will get affected. Is it right? What about preference share capital? Oh my God. It can be either equity or liability depending upon the terms of the issue. So Ind AS 32 you have to refer for that purpose, and accordingly it will get classified. What about compound financial instrument like convertible debenture? Convertible debenture, convertible preference share are mixture of debt and equity. So the equity portion will come in equity and the liability portion will come in current or non-current liability as per Ind AS 32. What about derivatives? Derivative will also appear in the balance sheet now. If you have entered into forward, future, option swap, it will appear as an asset or a liability in the balance sheet under, if it is asset, it will come under investment. If it is liability, it will come under as current liability. Then what about contingent liability? Contingent liability is shown in the notes outside the balance sheet because we need to inform our users that these are our potential liabilities. Sometimes the amount can be too high, like it happened in Vodafone case. They have to pay 10,000 crore rupees to the government as contingent liability. If they lose the case, they pay 10,000 crore, company get wound up also. So lot of companies, recently I have heard lot of casino companies, gaming companies, they were paying or not paying GST. Now they have to pay GST at the rate 28%, and some of them have to pay 5,000, 10,000 crore rupees of GST liability. And if they lose the case, the company can be wound up because they may not have so much of assets also. Disclose it as a contingent liability, and then the users can take a more informed decision. Now we'll come to the disclosure part quickly. Normally not asked in the exam. Normally not asked means never asked is not an appropriate term. Otherwise you will ignore it, and if they ask you, you will blame me. So I will read it. What are the disclosures to be given in the notes? For PP item, you have to disclose the class of asset. For example, plant, furniture, vehicle. You can't mix all of them. Computer. And you have to give a reconciliation starting from opening balance, addition, deduction, depreciation, closing balance. Same disclosures required for leased asset also. For leases, we have to also refer the disclosures given in Ind AS 116. Refer Ind AS 116. Capital WIP, you have to give a reconciliation from opening to closing, and the same thing for leased asset also. Investment property, same disclosures are required. Goodwill, you have to give disclosure relating to amortization. Then intangible asset, disclose the class of asset, disclose reconciliation, same disclosure required for leased asset. Intangible asset under development, you have to disclose the class of asset, whether it is software or patent or what. Then reconciliation is required for owned asset, and disclosure is required for leased asset. Biological asset, write down biological assets like animals and plants. You have to disclose again class of asset, how many sheep, goat, cow, elephant, horses. Okay. Then reconciliation, refer Ind AS 41 for more detailed disclosure requirement. That time there is one page disclosure, I will tell you later. And disclosure is required for leased asset also. Then trade receivable, tick mark important, they have asked question on this, and we are going to take those 3-4 questions. You have to give disclosures about trade receivable who are considered good and secured. Good but unsecured. The difference is here you own some security. You have some security. If it does not pay, you can recover from the security. Unsecured means God will help you if it does not pay. Trade receivable having significant increase in credit risk. That means those debtor where risk has gone up. If suppose customer is not paying for last 3 months, risk has gone up. If the insolvency proceedings have started against a customer, which means risk has gone up. Okay. And those creditors which have become credit impaired, means they are bad. Recovery is very difficult, disclose separately, and any allowance for bad and doubtful debt will be disclosed here only as a deduction. You also mention a refer Ind AS 109. There we are going to see the meaning of credit impaired, significant increase in credit risk, etc. There are some meaning for that terms. Some terms they have mentioned. I'll tell you. One example was insolvency proceedings have started, not paying up to a certain time period. What about investment disclosure? Market value you have to disclose. If there is any impairment in the value of investment, that you have to disclose, and you have to also disclose the name of the company where you have invested, that is investee company's name. If you have subsidiary company, you have to disclose the name of subsidiary also. Okay. Then we will come to loans disclosure. If you have given loan, any loan to related party will be disclosed separately. Which standard deals with related party? Ind AS 24. So we will see there is a long list of related party and they will be disclosed if you have given loan. Same disclosure is there in this standard also. Then remaining classification is like debtors. For example, secured, unsecured, significant increase in credit risk, credit impaired, allowance for bad and doubtful debt. Again write here for this portion. Also refer Ind AS 109. Also refer Ind AS 109. Keep writing. Okay. When you will revise, you will be finding it useful. Now we are going to solve questions on Schedule 3. But before we solve a question, I want to give you some exam tips. Do you want to take it? Otherwise you will say unnecessary you are giving tips. We are already well educated people. You want? So first thing what you do, Anup is saying sure and Rahul is saying yes sir we want. Okay. And Aniket Kumar is saying you are the best teacher on this globe. Yes, sir. Why globe? You should say universe also, na? And multiple universe and all the solar system that exist. So first exam tip is you should read the question carefully. Now in this chapter, just to give you a heart attack kind of situation. Okay, do you want heart attack? Say yes. Question number 10. Question number 10 on page 2.67. This is a question on Schedule 3. It starts on page 2.67 and it ends on page number 2.69. And our font size is also quite small. In the institute question paper, it will be around 5 pages or 6 pages. Right? So you have to read the question carefully. You get 15 minutes before the exam when you can start writing. So read the question paper carefully in those 15, especially the long questions. And in Schedule 3 question, and also in other chapters also, you have to mark the dates because they will ask you to calculate depreciation, interest, which will depend on the dates, present value. Then rate in the question, for example, for depreciation, for income tax, rate, etc. Then there will be lot of names also, name of parent, name of subsidiary, name of other investor will appear. So take care of that. Second thing, you have to read the adjustment carefully, and if you are given a trial balance, tick the item which have got adjustment, or if you are given balance sheet, P&L account, tick the items which will get affected. Use a pencil, not now. Then if item is already appearing in the trial balance, then it will have a single effect. It will have a single effect. You may have to bifurcate it. For example, question says loan is 550. Out of 50, 50 is interest accrued. So what I'll do, loan 500 will be non-current liability and interest accrued 50 will be current liability, but it is single effect only. Only we are just bifurcating into two numbers. But if you are given adjustment, like same adjustment, interest not recorded 50, then it will have double effect. One will go to P&L account, financial expense, and one will go to balance sheet, current liability, other financial liability. So adjustments will have double effect. If entry has already been passed in the trial balance, remember single effect. Only you have to adjust the numbers at two places. Then according to the given question, draw the formats. Usually in this chapter I will require following 5 formats. At least 4 I will require. SOPL, statement of profit and loss, SOCI, statement of change in equity, balance sheet, notes. Working note if depending upon the question. Like for example, for tax calculation, you may have to prepare a working note like that. So sometime we might require working note for tax calculation or depreciation calculation, etc. But otherwise not required. And very important last point, number 6. Institute is full of what should I say, questions which have multiple answers. So wherever you have doubt that it can be this assumption or this assumption, you write the assumption at the end of the answer. Is it right? So if you write assumption, the examiner will understand that you have made your answer based on this assumption. Like for example, only loan is appearing in the problem. It can be current or it can be non-current. So write down, we have assumed loan as current asset or non-current asset. Understood? So what I'll do, today we'll take question number 5 and I will solve in the book. Today you do one small homework on my behalf. Read this guidance note on division 2 of schedule 3 to the Companies Act, paragraph 7 in your book. Already I have explained most of it. Some more I will explain tomorrow. Okay. So you will not take much time. It is just about 2-3 pages. And to give you comfort, they don't ask question on this. So just you have a quick reading on this. The only question which I have seen till now is a question like the one we are going to solve now, or a similar problem. Not this one, but similar. So let us start question 5. We have limited time and we will solve in the book only because I have drawn the format for you. But in the exam, you will have to draw the format. So at least once you will solve the entire problem on your own in a notebook. We are in the classroom and we are bound by timing. So sometime I have to save the time. Otherwise to draw the format itself takes 45 minutes. Okay. The following information has been extracted from the books of P Limited for the year ended 31st March 17. So as I said, you have to underline the name of company. The year ending is 31st March 17. Then you are given figures which are rupees in 1000. Can you see that rupees in 1000? So we will also prepare our answer in rupees in 1000. Institute will agree for that, don't worry. Then you are given employee benefit expense. Okay, then where will you put employee benefit expense? P&L account, SOPL. Similarly, interest paid will go to SOPL. Then called up share capital will go to share capital in balance sheet. Dividend 6 is appearing. Debits column means dividend paid. Debit side means paid. Credit side means received. SOCI will deduct it from reserve, retained earning. Cash at bank will go to balance sheet. Income tax debit appearing, so it will go to tax expense. Remaining balance from previous year, so some amount was pending which you have paid. Okay. Warranty provision 90 will go to balance sheet under provision. Now it's not clear, is it short term or long term? Warranty can be long term also, short term also. If you buy a say calculator, 3 months warranty. If you buy a mobile phone, 1 year warranty. But if you buy a car or AC, 6-year warranty, 3-year warranty. So you have to write an assumption for that. Then we have general expense will go to P&L account. Land and building, will prepare a note for that. Cost is 1,10,000, 1 lakh, and depreciation is 48. Whether this depreciation is on building or on land? Building. So that is why they have not mentioned it. Students should know. Usually land is not depreciated. Then similarly, plant and machinery at cost, depreciation. Retained earning opening balance on 1/4/16 means opening balance. Accumulated depreciation 1/4/16 means opening balance. Now 10% loan 80, which means interest 8 should also appear in the P&L account. But how much interest is appearing is, you see here, 5, second line 5. What is the mistake in the question? When was the loan taken? Not given. You assume full year. And if it is full year, then 8 minus 5, 3 will appear as accrued interest. Accrued interest. Purchase will come in P&L account, sales will come in P&L account. Opening stock is given. This is opening stock 1/4/16. So we will write in change in inventory. Trade payable, balance sheet. Trade receivable, balance sheet. Then we have additional information. Closing stock is given. So one effect will be change in inventory. One effect will be balance sheet current asset. Then building and plant and machinery are depreciated on a straight line basis. Very good. No residual value. Very good. Add the following rate. Building 5% and plant and machinery 20%. So rates are important. These are all per annum, even if per annum is not written. Then there are no purchase or sale of non-current asset during the year. Very good. So no purchase or sale of PPE item. Income tax for the year to 31st March 2017. Income tax for 31st March 17 rate is 30%. But the calculation they have already done for you. 1,35,000. This is current tax. Next is the loan is payable in 5 years. So loan will come as non-current liability under that financial liability. Year-end provision for warranty claim has been estimated at rupees 75,000. Oh my God! So what you are going to do with that? Opening balance is how much? 90. Closing is how much? 75. So 15,000 rupees we are going to reverse. Is it right? Land has been revalued at rupees 1,80,000. And what is the cost of land in the problem? 1,10,000. So 70,000 will go to revaluation reserve. and because tax rate is given 21,000, 30%, deferred tax liability will also come. Deferred tax liability will also appear. Required, prepare P&L account and balance sheet on 31st March 17. So you have been given which formats? You are given SOPL, you are given SOCIE, balance sheet is given, notes is given. Under notes we are given change in stock and PP, other income and trade receivable. Is it right? And no, loan is not there. Just make a small correction. It is note 3 is other income. You make it other expense. Make it other expense. Note number 3 heading is other expense. Okay, so how do you solve? The way I have learnt to solve a problem of financial statement is go line by line. Item appearing in trial balance will have a single effect. So first you spread that trial balance item over different formats and then look at the adjustment and give the effect. So I am going to follow that. Some teachers or some students follow this also. They first complete P&L account, then SOCIE, then balance sheet. You can do that also if you are comfortable with that. Is it right? But I find that is little difficult because every time you have to continuously read the problem. Okay, if I have to finish P&L account, I have to read the whole problem from beginning till the end. Then if I have to complete SOCIE, I have to again read the problem from beginning till the end, so that nothing is missed out. But if I go line by line, we will not miss anything. And if it is very urgent to make adjustment, we'll do it. So are you ready for that? Yes. So we'll start with employee benefit expense. Do we have any adjustment in this? No. So come to P&L account, point B3, employee benefit expense amount, tell me. 170. Then interest paid, we have discussed there is an adjustment here. So write here 10% of 80 because the loan amount is 80. So this will be 8. But the trial balance says 5. So remaining 3, I have to put it in balance sheet. So in balance sheet, we have current liabilities here. Under other, that other financial liabilities there. Accrued interest, write down 8 minus 5, 3. Please practice in notebook also. Share capital 200. So that will come in SOCIE. Share capital, opening balance 200. Just write here. I'll come back to this. Dividend 6 will come in SOCIE. Dividend paid from which reserve? Retained earning or revaluation reserve? Retained earning. Then cash at bank, balance sheet, asset side, current asset, cash and cash equivalent. No adjustment in that? No adjustment? No, 9. Income tax. This is last year income tax paid in this year. So come to P&L account, tax expense. You write in bracket here 10 and plus, because current year also we have to consider. This is 10. Warranty provision is 90, but there is an adjustment, says year end warranty provision is 75. So what I'll do, 15 I will reverse. 15 I will reverse. So how do I reverse it? Provision account debit to expense account, because last year we had expense to provision. So this year we will reverse it. So I have prepared a note number 3, other expense. In other expense, I will reverse it. Second line, reversal of excess warranty provision, 90 minus 75, 15 in bracket, because we are reversing the expense. And what about second effect 75, balance sheet, under the head non-current liability, provision for warranty 75. Now next item is general expense, again that note number 3, how much is that? 240. Don't take any total, anything can come again. Then we'll come to note 2, property, plant and equipment. Property, plant, equipment, you will write land opening balance, you will write rupees in thousand, so 110. Building 100. Wait. And then accumulated depreciation opening balance in building, right, 48. Plant and machinery at cost 125. Plant and machinery opening depreciation accumulated 75. Can you see that? Retained earning opening balance SOCIE, retained earnings, second column, amount 270. Then 10% loan 80. Balance sheet, liability side, non-current liability, financial liability, borrowing 10% loan. Is it 80? Then purchase and sales will come in SOPL. Purchase is how much? 470. Sales, revenue from operation 1300. Inventory opening is 150. You come to this change in stock, right here 150 opening stock minus, I'll come back to this. Then trade payable 60, where current liabilities, financial liabilities, trade payable 60. Trade receivable, financial asset, trade receivable, current asset 728. Why note 4 is written? Is there any note on that? Okay, let us write down first here. How much? 728. Assume secured, and then we'll transfer it to balance sheet also. 728. Okay, now trial balance is over. Additional information, closing inventory is 250. So one effect in balance sheet on the screen, asset side inventory. Can I write 250 here? Balance sheet, one effect, inventory 250. And change in stock also we have to write 150 minus 250. How much is that? 100. But we have a note also on that. Anyway, so if we have a note, we'll write in note first. Go to note. Opening stock was how much? 150. Closing stock? 250. So 100 is the increase in the stock. Negative. Write down negative figure. And in balance sheet you have written? In P&L account, SOPL negative. Correct. 150 minus 250. Okay. Adjustment number 2. Building and plant and machinery are depreciated on a straight line basis. No residual value. On building 5%, plant and machinery 20%. But before that, what I will do, I will go to adjustment number 7. Land has been revalued at 180. So entry for revaluation of land will be land account debit to revaluation reserve. Revaluation reserve will come under OCI here. How much is that? 180 minus 110, 70. But there is a tax also. So there will be a deferred tax liability on this. 30% of 70. How much is that? 21 negative. Okay, now we'll come to second effect of that. So first you come to PPE note 2. Where is PPE? Okay, note 2. Land, write down change 70. Is it right? And then we'll come to balance sheet for DTL. Come to liability side, you will find deferred tax liability here. How much was DTL? 21. And then you will come to SOCIE also. Come to SOCIE also. In SOCIE, what will you write? Revaluation reserve? No, net amount 49. Revaluation reserve net amount 49. 70 minus 21 net amount. And sorry, not negative. That is by mistake. 49. So the net effect on the reserve will be 49. OCI 21 negative, yes, that I have written. OCI 21 negative because revaluation reserve will increase your income, tax liability will reduce your income. Net increase in income will be 49, which we have written in SOCI. Okay, and in 70 separately you have to write in land and building, and 21 you have to write in balance sheet as a deferred tax liability. Now we'll come to that note number 2, which is spending. So we'll complete this note now. So first you tell me total of closing balance here: 180, 100, 125, and then depreciation on building 5% of the cost. So 5% of 100 is 5, and 20% of plant and machinery cost 125, 25. So closing depreciation will be 48 plus 5, 75 plus 25. Net block will be 180 minus 0, 180, 100 minus 53, 125 minus 100, 25. So now we'll take total of all the columns. Start from here: 335, 70. This is how much? 405, 123, 30, 153, 252. Out of these numbers, depreciation for the year will go to P&L account. Net block closing balance will go to balance sheet. Is it right? So please come to balance sheet. PPE, how much you got? 252. And P&L account depreciation 30, 30 here. Adjustment number 3 is not required. No purchase or sale of non-current asset. Adjustment number 4, income tax are estimated at 1,35,000. On the screen, P&L account tax expense 10 plus 135. So how much it comes to? 145. And what will you do with this 135, which is not in the trial balance? Balance sheet, current liability, provision for tax. So come to the last item in the balance sheet, provision for tax. 135. 10 is already in the trial balance, so no second effect of 10. Next line is loan is repayable in 5 years, so loan we have put in non-current. Year end provision for warranty claim we have done, land revaluation we have done. But what you do, first to come to the notes. 1, 2 we have closed, 4 we have closed, only 3 is pending. So how much is 3? 225. 1 is negative figure. 225 other expense in P&L account. Go to P&L account, 0.6 other expense, 225. Total of income side 1300. Total of expenses here 803. PBT will be 1300 minus 803. 497. Tax expense 145. So PAT will be 352. EPS will be 352. And how many shares are there? Go to the trial balance. 200. Divide by 200. EPS is 1.76. Other comprehensive income 70 plus 21. So this is 49. Actually, if you have space right here. And now total comprehensive income will be PAT plus OCI 401. 401. 49 I have already written in the SOCI. This 352 we will write in SOCI here. So first we'll complete the rows. 200 plus 270. 470. 352 plus 49. Presentation is important. And this is 6. Now take vertical total. 200. Second column. 616. 49. Last column. 865. Is it right? In balance sheet, share capital 200 and this 2 total will come under other equity in balance sheet. Okay. So come to balance sheet, share capital, write down 200. Other equity is how much? 665. Now you come to asset side. Tell me the total of the asset side. Tell me the total of the asset side. 1239. Very good. And tell me the total of liability side. 1239. Tell it. Power of double entry system. This was a simple example. It was in one of the institute publications only. I have not written the year, but it was there. But that was simple. We will take 1 or 2 more advanced question also tomorrow. Okay. So thank you very much for watching this video. See you tomorrow. Bye bye.